Good evening, everyone. So, a very warm good evening to all of you. Let's wait for 5 minutes. Let's wait for your peers to join as well, and then we will start. Good evening, everyone. A very warm good evening. Let's wait for more couple of minutes. Let's wait for others to join as well, and then we will start. So, let's start, guys. A very warm good evening to everyone, those who have joined a bit late. Yeah, there might be any technical issues related to LMS. It will be resolved soon. Without wasting much time, let's start with our discussion on economics. Yesterday, we discussed two broad concepts in detail. So yeah, that's what I'm doing, VT. Just give me a minute. So yesterday, we discussed two broad concepts in detail. That is GDP, that is gross domestic production. And the next one is GNP, that is gross national production. GDP, that is, which is gross domestic production, deals with deals with everything that is produced within the geographical boundaries of a nation. So domestic means everything that is produced within the geographical boundaries of a nation. So Wasim, we have some few batches merged, and I'm not sure which batch you're talking about. So in case you have any such doubts regarding it, you can raise a ticket about it. Okay. Coming to GDP again, coming back to GDP, it's gross domestic production. And when it comes to gross domestic production, anything that is produced within the geographical boundaries of a nation. Guys, is my voice breaking? Is Am I not clearly audible? Don't worry, guys. I'll share the notes. I'll share the notes. Don't worry about it. Okay. So Priyanka, there might be probably an issue from your end because everyone else is saying the voice is clearly audible. Okay. So yesterday we discussed two broad concepts, that is GDP, gross domestic production, versus GNP, that is gross national production. And when I say GNP, I highlighted N as nationality. My nationality is Indian. So any person working anywhere in the world, as long as he is a citizen of a nation, it will count. The contribution made by him will be counted as the nation's GNP. On the other hand, anything produced within a geographical boundaries of a nation will be counted as the nation's GDP. So I hope this is clear, the difference between GDP and GNP. We discussed that how we calculate GDP, how we calculate what was the formula for GNP. If you remember, the formula for GNP was GDP plus net factor income abroad. Now we need to discuss the criticisms, like we discussed the limitations of GDP yesterday. We need to discuss the limitations of GNP. So everything up till here what was discussed in last class. Just give me a second, guys. So yeah, everything up till here was discussed in the last class. Now we will starting with continuation of the topic that was discussed yesterday, that is limitations of GNP. Similar to GDP, GNP also has more or less same limitations. Can anyone recall what was those limitations that could impact GNP as well like it impacted GDP? What can be the limitations of GNP based on the limitations of GDP that we discussed yesterday? Can anyone think about it? No income inequality. Well, GNP, correct. Like informal trade activities was not accounted in GDP. It is difficult to account for net factor production abroad. Net factor production abroad. And and yes, that is not a comprehensive measure. That is correct. The second limitations of GNP is again the same that it was about GDP. Like it just both GNP and GDP, both GDP and GNP focuses on only economic output. Yes, yes, PP. It has to be accurate, but it is not possible to be accurate. So the values that is being reported is considered to be accurate. Sure, sure, this is. I'll discuss that as well. After this, I'm going to discuss the importance of GNP that was also covered the last class. And I think we missed that. So we will cover the importance of GNP as well. But I think we touched upon importance of GNP. You will recall it when I will highlight the point. So don't worry. Let's just get done with the limitations of GNP first. Both GDP and GNP focuses on only economic output and does not give a comprehensive measure. Does not give a comprehensive measure related to well-being of a nation. Agreed? Similar limitations was discussed, exactly same, not similar, but exactly same limitations was discussed for GDP as well. So the first point is it is difficult to account for the net factor production abroad. So how many Indians are there in abroad, and what those Indians are actually earning? The exact report to get that data is very difficult, and that is what the first point says. For changing the currency is not a very much difficult task. It fluctuates regularly, but on basis on the day on which the report is filed, you can check the quotes that is available in the market. That is called forex quotes, foreign exchange quotes. That is not sort of a very difficult task, but it is difficult to account, means make the account and make the calculations that how many people are living, Indians are living in abroad. And although we know how many Indians are living in abroad, we don't usually, it's really difficult to get the data that what exactly each of these Indians are earning. So that is what the first point says. It is difficult to account for net factor production abroad. Urvashi, are you clear with this? Perfect. Next, let's go to the importance of GNP that we discussed in the last class. Someone from you guys said that we failed to touch upon this. Let's revise this again. Importance of GNP, importance of dash national production. It provides a broader perspective. So yesterday we made something like this. This is GNP and this is GDP. GDP shows that what is Indians, what are Indians producing within a geographical boundaries of a nation. What are the people and citizens of a country producing within the geographical boundaries of a nation. GNP has a broader perspective. And what does that perspective says? It measures all the contribution made by Indians within India, or so India is an example over here. You can take the example of your respective nation within India and outside India as well. So we just, Asus, we have not started much yet. We have just discussed these 2 points, that is limitations of GNP, and these 2 points were related to the limitations of GNP. Also, I would request that you are 15 minutes late, please. The person who has joined from Asus, I don't know your name. I'm really sorry, but please join in time from the next time onwards. Okay. Although we have not been very much forward yet. We have just discussed what was discussed in the last class, and we are discussing importance of GDP, where we concluded the last class. So GNP, it provides a broader perspective. It provides a broader perspective by including the contribution yes, that could also be a case, GA, by including the contribution of a country's residents to global economy. It provides a broader perspective by including the contribution of citizens of a nation to global economy. This was the first point that we discussed about importance of GNP. and the only point I guess that we discussed about importance of GNP. Rest GNP, uh, as long as how GDP is important, GNP is important as well, because GDP is nothing but the subset of GNP. So I will summarize everything that was discussed in today's class. May I know the name of you? May I know your name? The person who has joined from ASUS user ID. May I know your name, please? The person who said that I have joined late at 7 o'clock. Please, may I know your name? Okay, so limitations of GNP are it is difficult to account for net factor. Shashi, okay, Shashi, please, I would request you to join on time from the next time onwards. What is the limitations of GNP? One of the limitation of GNP, it is difficult to account for net factor production abroad. What is net factor production abroad? The people who are living outside India, uh, how many of them, how many of Indians are living outside India, and what is the exact amount that they are making? It is difficult to measure that. So let's suppose there are lakhs of Indians who are living in USA, Canada, Germany, and different abroad countries. But what are they exactly making? It is difficult to calculate that, and that is why makes it difficult to calculate GNP. Both GDP and GNP focuses on only economic. Both GDP and GNP focuses on only economic output and does not give a comprehensive measure related to well-being of a nation. So this is the point that we broadly discussed related to GDP. Same is applied to GNP as well. It is not a comprehensive measure. It doesn't matter. Might be the GNP of a nation might be greater. Uh, it would be better as compared to others, but it does not shows you that the people of that nation is happy, they are healthy, they are having a high standard of living and all those things. It is not a comprehensive measure. It does not give you the true picture or the whole picture of the economy. So summarizing GDP and GNP, although they are crucial economic indicators, both GDP and GNP are crucial economic indicators which provides insights into a country's economic performance, which provides insights into a country's economic performance. Comfortable? What does these two indicators do? These two indicators provides insights to a company's or sorry towards a country's economic performance. We saw that GDP focuses on national production, GNP focus on the nationality of the residents and citizens who are contributing to the world economy. So based on this, here we are done with the two indicators, that is GDP and GNP. And the next topic or the subtopic that we will be starting with is inflation. So be attentive, guys. This is completely new. Those who have attended the last class or not, it won't matter because this is completely new. So let's start our discussion fresh on inflation. What is inflation? What is your idea of inflation? In the past classes or in the past sessions, you might have heard about the word of inflation. Wherever you might have studied in your 10th class, 8th class, 12th class. Reduction in the value of currency. High demand, less supply creates inflation. For same product, paying more with passing time is inflation. Many of you are saying reduction in the value of currency. Actually, it is currency depreciation and not inflation. So inflation is nothing but sustained increase in the general price, in the general prices of goods and services in an economy over time. Sustained increases in the general prices, sustained in increase of general prices of goods and services. Yes, AM, you're correct. Sustained increase in the general prices of goods and services within an economy is called inflation. So what is inflation? Sustained increase in the general prices of goods and services within an economy is called inflation. Earlier, the price of gold was 30,000 rupees in year 2012 or 14. And in year 2024, the price is somewhere around 75,000 per 10 grams in India. Now the question is whether India is impacted by inflation in last 10 years. How will you determine that? How will you determine that? The prices data pack in year 2010, that the recharge pack, the internet was around in India was around 150 rupees, 150 rupees for 1 month of subscription. And also in 1 month of subscription, 150 or 250, I don't know the exact value. So around, it was very much high. It was around 150 to 250 rupees. And you used to get 1 GB per month, 1 GB per month. And for that, you used to pay 250 or 250 rupees, actually, not 150, for 1 month of subscription of mobile data. And today you are getting subscription at 230 rupees. After 10 years, you are getting the subscription at 230 rupees. And there you are getting 1.5 GB per day, 1.5 GB per day. So based on telecom sector, the prices have fallen down. The prices have fallen down. Well, real estate prices have increased. Gold prices have increased. Let's say there is a hypothetical economy where transportation prices has fallen down. Transportation prices has fallen down. Let's say grocery prices has fallen down. Again, considering a hypothetical economy. So what I try to say over here is some sectors have witnessed increased prices. Some sectors have witnessed decreased prices. So how are you going to conclude as an analyst that inflation has impacted the economy or not? As an analyst, how are you going to determine whether inflation has impacted the economy or not? We are coming to that here. We are coming to what are the factors that due to which the inflation is caused and all those things. Yes, you are correct. M. So there is something called as CPI. Heard about this ever? Have you guys heard about, how many of you have heard about this? CPI. BS. Batlan Sara, can you please mention your query in the chat box? You have raised hand, that's why I am asking. So it's CPI is Consumer Price Index. consumer price index. What is CPI? It is consumer price index. What a consumer is paying for a basket of securities, for a basket of not securities but goods, basket of goods and services. What a consumer is paying for a basket of goods and services is consumer price index. And if we see that consumer price index, if we see the consumer price index is rising, it means that we can conclude that economy is witnessing inflation. Now, I could have concluded this here itself and moved on with the next uh, topic about the reasons of inflation. But it is ideally important to understand the word consumer price index and more specifically break it out to have a comprehensive understanding of this term. Now, what does the word index mean? What does the word index mean? Last time, where did you heard about the word index? Okay, someone is saying indicator. At mutual fund. Someone is saying ranking. Heard in capital gains, group of companies. Okay. Benchmark, very good. Someone is saying benchmark. Percentage. Margin. Average. Basket. So what index is? Rate, list. These are the words that has been thrown out by you guys. Really glad for your responses. So let us understand what is index. Index is nothing but just a representative of a larger group. What is index? Index is nothing but just the representative of a larger group. There are more than 4,000 plus stocks in India. Can you name the major stock indices? So indices are the plural for index. Can you name the major stock indices? Most of you are saying NSE. NSE is not the index, but it is an exchange. It's National Stock Exchange. Not only in India, you can name any of the indices in the world. Any of the indices in the world. It's Nasdaq, Topins, Shanghai Stock Exchange. What is the Dow? Dow is S&P 500, Russell 2000. Correct. Nikkei 50. So coming Dow Jones, yes. So there are around 4,000 companies, in India. NSE is an exchange. NSE has different indices under it, and one of that is Nifty 50, the major stock index in India. Similarly, there is a different index called as Sensex, which is governed by BSE, Bombay Stock Exchange. Nifty 50 is governed by National Stock Exchange of India. In US, there is Nasdaq. Dow Jones. Toppins is the index of Japan. So each and every country has their own index. Now, what is this index? This index is nothing but this index is nothing but the representative of securities, representative of companies listed listed in the stock exchange. You might have often heard the words in news channel, the market is in boom. The market crashed. The market is following a bearish momentum. The market is bullish. So those who are not aware about this word, boom means the market is growing. But what exactly in the market is growing? What exactly in the market is growing? Out of these 4,000 companies, there might be few companies which are in top gainers list. There might be few companies which are in top losers list. So how can you conclude that the market is growing? Some of the companies are winning and some of the companies are losing. But if index is growing, the representative of these companies are growing, it would mean that the market is growing. If the index has crashed, if index has dipped down, then we are saying, we heard the headlines that market has crashed. Market has witnessed 2,000 points dip in Sensex. Does it mean all the 4,000 companies have fallen down in prices? No. Some of them might be in upper circuit. Some of them might be winning every day. But overall, the representative of these companies are losing. And that is why we say market is dipping down or market has crashed. So this was about index. This was about index. Now, we were discussing consumer price index. Consumer price index is the representative. It is what? It is a representative of basket of goods and services used by an average consumer in an average household. Used by consumers. So what is consumer price index? Consumer price index is the representative of goods and services used by consumers. So if the representative, it means that there might be few elements or few goods in the basket that their price might be rising. There might be few goods in the basket where price might be dipping down. But overall, this representative, that is CPI, represents that what is the overall scenario. What is the overall scenario? So that is consumer price index. It shows the average, what a average consumer uses each and every day. What That is what I am explaining, PM. So what an average consumers, the list of the baskets of goods and services that an average consumer uses every day, whether the prices of those goods and services are rising or falling, that is given by consumer price index. PM, are you getting it? So consumer price index is nothing but the representative of price volatility of goods and services, of basket of goods and services used by an average consumer in a given economy. Okay. Have you got this? Sure. I will repeat again. What is consumer price index? Basically a of prices, representative of prices or price volatility, representative of price volatility of basket of goods and services, basket of goods and services used by an average consumer. So there is not a straight away formula, because there are, these are also based on some, not only on the formulation is based only on quantitative factors, but consumer price index is also based on quantitative as well as qualitative factors. Now, how does consumer price index directly related to inflation? I'm not saying consumer price index increases the inflation or does not increase the inflation. Let's say consumer price index was at the level of 1000. It means that in 1000 rupees, you were getting a basket of goods and services. But just someone said to involve number in this so that understanding may be better. So I am involving number in this. Please try to understand. The baskets of goods and services, consumer price index was at the level of 1000. It means that the baskets of goods and services that is underlying in this consumer price index, that is the underlying element of this index, is priced at 1000. If if in the next 1 year it has increased to 1200, what does that mean? It would mean the basket of goods and products that you were getting at the rate of 1000 1 year before, you are getting same products at the rate 1200 after after 1 year. Are you getting this now? After 1 year. My question is, what is the rate of inflation? What is the rate of inflation? The rate of inflation is 20%, because the prices, overall prices of products have increased 20%. The same goods that you were getting, same basket of products, it is not about one individual goods, but the same basket of products that you were getting at the rate of 1000 before 1 year, after 1 year you have to pay it 1200 for the same product, and the inflation is 20%. Now the question is, this is inflation, all these things. Yes, PJ, you can say it's not about the average cost of living. It's basically, so when I say Nifty is 20,000, Nifty is 23,000. Nifty is 23,000. Does that mean that average value of stocks in Nifty 50 is 23,000 rupees? No, it does not mean so. So PJ is asking a question that, does that mean that 1000 rupees is the average cost of living? No. It is just that it is a number, it is an index based on which it has been given a points. It has been given points. It has been assigned points. Let's say the points calculated for CPI, consumer price index, is 1000 This 1000 is neither a amount, this is not neither rupees terms, this is not neither in dollar terms, this is neither in pound terms. It is not in the amount terms, it is in points terms. What I'm trying to say over here is it is in points terms. So there is no specific unit for this 1000. It is just an absolute measure. So when it increases from 1000 to 1200 or it decreases from 1000 to 800, we should compare, we should be able to compare whether the prices in the economy have increased or whether the prices have decreased. That is just the basic idea of this number. It does not mean that the average cost of living is 1000. Not all the goods and services, the basket of goods and services are prepared that is being consumed by. We will also see that what are the goods and services and how it is determined, what are the challenges and drawbacks of CPI. We will also see that. But not all the goods and services are considered in inflation. The basket of goods and services that are mostly used by an average consumer is the part of that basket of CPI. Are you getting this case? Here 1000 is the assumed figure. The data about CPI is published by Finance Ministry on quarterly on annual basis based on the economic conditions of a nation, based on the rules and regulations of a nation. Now, we have understood that inflation is nothing but rise in prices of goods and products, goods and services. But what are the causes of inflation? What cause inflation to rise? What does actually cause inflation to rise? Which brings us to types of inflation. Types of inflation. So BK is saying very wonderful thing. If demand of goods are greater than the supply of goods, we face inflation. So this definition fits under demand pull inflation. The demand of a particular good is pulling the prices upwards. Okay, AT. Okay. So please share this credit with AT as well. AT also shared this, that demand of products, demand of products drives the prices, upwards, and that is called demand pull inflation. What could be the second reason? What could be the second reason? The second reason is cost push inflation. The first one was demand pull inflation. Second one is cost push inflation. And third one is built-in inflation. Built-in inflation. I will explain each of this one by one, but take a moment and try to acknowledge what does these words are trying to say. Before starting with the explanation, please try to explain it to yourself that what does these words means. Demand pull inflation, cost push inflation, and it would be difficult for you to judge what is built-in inflation just from name, but I will explain that, don't worry. But just think about what is demand pull inflation and what is cost push inflation. The name only will be self-sufficient to answer all your queries. Starting with demand pull inflation. When demand of the products are higher as compared to the supply of the products, this causes the price of products to rise. This causes the price of product to rise. And that is demand pull inflation. No, all these three inflation works for all the or every category of products, not only for premium products. I will write a formal definition, AH, don't worry. Anushka, I will write a formal definition, don't worry. I just want you to think about it. When the price rise, what is price rise? Price rise is nothing but inflation is due to rising demands yes, Envy, you are correct. When the price rise, that is price rise is nothing but inflation is due to rising demand. It is a demand pull inflation. So let's suppose I am producing shoes and there are high demands for my shoes that every time I launch my shoes, it goes out of stock. Every single time when I launch my shoes on marketplaces like Amazon and Flipkart, it goes out of stock. So in order to earn more, I can do two things. I can increase my production capacity. That would cost me something from my own pocket. But on the other hand, the other thing I can do, I can increase the prices of my product. And when I will increase the prices of my product, the increase in price would be categorized as inflation. And this inflation is due to rising demands. That is demand pull inflation. Everyone clear with demand pull inflation? Everyone? Shall we start with cost push inflation? Now, in order to produce my shoes, I need, yes, you are correct. In order to produce my shoes, I need rubber. In order to produce my shoes, I need rubber. I need plastic. I need thread. I need cotton. I need shoelaces. So basically raw materials. Correct? In order to produce the shoes, I will need raw materials for those shoes. If the prices of raw material rise, if the prices of these raw material rises, don't you think I will have to increase the price of my shoes in order to be sustainable? If the prices of these raw material rise, don't you think I will have to increase the prices of my shoes in order in order to be sustainable. So the rise in price over here is due to rise in the cost of raw material, and that is why the name suggests cost push inflation. That is why the name suggests cost push inflation. On the other hand, the third one is, yes, Kriti, you are absolutely correct. But let me just give a formal definition for cost push inflation. The rise in prices are due to rise in production cost. Rise in prices are due to rise in production cost. Example, higher price of raw material. When the cost of production of a particular set of goods and services increases, the price of such category of goods and services also increases, causes this kind of inflation to happen. This is what AS says. So the rise in prices is nothing but inflation. Inflation in the economy is due to rise in the production cost. For example, increase in the raw material cost, that is cost push inflation. When the rising prices of raw material also occur, rise in prices of raw material also occurs due to demand pull inflation. So that is the point of view you are taking from the business point of view. As if you are a shoe owner, always look from the customer point of view. Yes, VB, don't worry about it. Last year, onion prices goes up to 250 per kg in India. So that may be due to holding. That may be due to holding. Now we will also see what is holding. We will also see what is holding. But I have noted your doubt, Shashi. Just let us get done with built-in inflation and I will come to holding. And also someone asked that, can we manipulate inflation? Can we purposely change the price levels of a goods or services or a product? Although it is illegal in few countries, but it is being done in practical sense. Meanwhile, if price of raw material increases as price of final product increases, then what type of inflation is this? So Priyanka is doing a reverse engineering over here. She says, with our logic, we felt that raw material prices increase, so we will have to increase the prices of finished product. And if raw material prices increase, we will have to increase the prices of finished product. That is cost push inflation. But let's say the prices of finished product has increased due to high demand. So that would be demand pull inflation. Okay. Priyanka is asking, what would that inflation be called if the prices of finished products are rising and that is giving rise to raw material, increase in prices of raw material? Actually, it is practically happening. It is practically happening, but this is a chain reaction and there is no term for such kind of inflation. This is nothing but a chain reaction. Why I am calling this is a chain reaction? let's say, let's say that doctors, not starting with doctors, let's say farmers, we will so I'm really glad that you guys are curious and asking doubts. Like, so I have received few doubts, and that those are really good doubts to be thought of. One doubt is by AR, that what type of inflation is rise of LPG prices in India and what are the reasons behind it. To get the reasons behind it, we will have to see that which type of market structure does LPG belongs to, which type of market structure that LPG belongs to. And we have a whole together a different session on it related to the firm and market structure. We will have to study the type of business LPG, the type of business LPG in. So I won't get divert to it, but just make sure, AR, that you ask this doubt when we are going to discuss, when we are going to discuss the types of market structure, because I will have to divert it and it will open the suspense. What I wish to do is flow the concept like a river. After every concept, I want to make a interlinked theory. Let's not get jump into these things. Yes, geopolitics is one of the reasons, but we are definitely going to analyze that what are the reasons behind rising LPG prices. How can we control the rise or price, which is known that the economy will be in trouble. That NV is part of monetary and fiscal policies. That is part of monetary. And I'm really glad that we are on the first chapter, and you are thinking of jumping to the third chapter, fourth chapter, fifth chapter. I'm really glad that you guys are curious and doubts are popping up in your mind, and that is the ultimate aim of learning. But note down these thoughts in the notebook, and we are going to discuss each of these things in detail when we are coming across that particular topic. Each of your queries are answered in the coming topics. Now, KS is here with a doubt that in a heavily competitive market, again coming to the types of market structure, why does someone increases raw material cost based on finished product cost? The question is, who said that this raw material that is required for manufacturing shoes is a heavily competitive market? It could be a monopolistic market, right? It could be an oligopolistic market. So I don't want to throw these terms right in front of you. That is why just we will also discuss this case. Note it down, and we are going to discuss this. Never ever have I mentioned that this is a very competitive market and the raw material prices have increased. We will see that how does market competition affects the prices, but this is not the right point to discuss that. We have a lot of topics to cover in economics, and we will definitely be going to discuss it in coming time. Yes, we will go on a break. GS, Shivam, we will go on a break. Give me 5 minutes. Let me complete built-in inflation, and and we will go on a short 5 minutes break. Now, where was I? I was in this part where Priyanka asked that if finished product prices are rising, and that is not exactly the reason. If you are selling, let's suppose you sold something for 500 rupees. You sold those shoes for 500 rupees. And due to whatever may be the reason, you are selling it. The first lot you sold for 500 rupees. Yes, Shivam, tell me, how can I help you? SB Shivam Banswar, tell me, how can I help you? 500 shoes are being sold. Shoes are being sold for 500. The first lot of shoes are being sold for 500, and the second lot of shoes are being sold for 800. Now you are a businessman and you are an entrepreneur. You will decide the price of your product. How the price of your product are going to affect the cost of your raw material. It will happen due to chain reaction, but in the long term, but in the long term, that is due to chain reaction. The example was farmer is increasing the prices of wheat, rice, and we as a consumer will have to earn more to feed our stomach. So that is why each and every profession will rise will rise the prices of the services or products that they are providing in order to gain more profit out of it. A profit is for one is the cost for other, and to overcome that cost, the same person will charge more from others. So that is the reason, that could be the reason that the rise in finished products could give rise to the prices of raw material, but it will take a long term horizon to impact the prices of raw material due to increased prices of finished product. It won't happen overnight. So there is no such concept which deals with the increased prices of finished products with respect to raw material. I hope this is clear, Priyanka. But in heavy competition market, okay. For example, we will see what are monopolistic, what are oligopolistic market. Hold on your thoughts for a while, RK. So, Prachi, this was not an example. This was not a example. This was just a doubt by Priyanka, which says that if raw material prices are increasing, it would give rise to increase in prices of finished product. Are you clear with this, PJ? If raw material prices are increasing, it give rise to the prices of finished products. Prachi, are you clear with this? But the question is, what if the rise in the prices of finished products gives rise to the increase in the prices of raw material? So practically, if you look from the business point of view, your supplier is giving you raw material and he is concerned about his prices. He has nothing to do with what you make out of it and at what prices you are going to sell it. He has nothing to do with, are you getting this, Prachi? He has nothing to do with what you are making out of that raw material and what prices you are selling. So whatever may be the prices of finished product, it is not directly impacting the prices of raw material, but the prices of raw material are directly impacting the prices of finished product. That is why over here it is a cost push inflation. Over here it is a cost push inflation. And over here, which says that increased prices of finished products increases the raw material prices. There is no logic behind it, and hence there is no term behind this. This is what we discussed, PJ. Are you clear with this? Finally, built-in inflation. Built-in inflation is due to the rise in wage prices, the rise in wage prices of of workers and laborers. So if the inflation is going on in an economy and the workers and labor market is not able to have a sustainable life, what they would ask? They would ask for a price rise or a rise in wages. They would ask for a wage rise, correct? And if they are asking for a rise in wages, if they are asking for a price rise or a wage rise, then the production cost, the overall production cost is also increasing. The cost for you is also increasing. So built-in inflation can be interpreted as one of the type of cost push inflation, where the rise in prices is due to rise in wage inflation, rise in wage inflation. That was built-in inflation. Because if you are paying higher wages, you will have to increase the prices of the product that you are selling for profit margins to be sustainable. That is the idea of wage built-in inflation, and also called as wage inflation. Yeah, this also includes salaries to your employers, not employers but employees. Salary to your employees. Salaries are paid by the employers to their employees. This also includes that. So yes, this was about this was about built-in inflation, and the final part is hyperinflation. Yes. I am going to take. So okay, GS wants a break. Let's go for a 5 minute break. Let's go for a 5 minute break and just be right back. Yes, KS. So let's go on a 5 minutes break, but be right back on time in the next 5 minutes. Freshen yourself up and be right back in next 5 minutes. Yes, yearly appraisals are an example of built-in inflation. When we are back from the break, I will start with example on built-in inflation, and then I will go to hyperinflation. Yes, at the end of the class, I will share both yesterday's and today's notes. GS, I asked you to raise a ticket about it. Have you raised that? And again, yesterday as well, I told you, right, that this is not, I can't discuss your personal problems in front of the whole class. So GS, I would again request you to please raise a ticket about it. And we will have a one-to-one session and we will discuss your doubts. You can log into your LMS and there you will find a section which says ask a doubt. Go to that, ask a doubt and raise a ticket related to your concern. Once you are completed with your syllabus SD, then you will be starting with your placements and interview sessions. So SD, which sessions are you from? Which batch are you from? May I know that so that I can guide you on this? So KM, you can find those sheets on LMS as well. So there was no batches that started from January. I guess the batch started from, okay, January, right? January. March. So you will be completed by this month end. This month end you will be completed by your sessions. SD. Yes, yes. The sheets are being uploaded on LMSKM. Yes, exams will also be conducted before placements, and you will be expected to clear all those exams. So let's wait for a couple of more minutes, guys. Allow me as well to go on a break, and we will be right back in next 2 minutes. Yes, KG, we have still a long way to go, and you will acquaint yourself with those skills that would help you out, that would help you guys on your interview day. Exams would be most probably next month. So you will be having exams on this. You will be tested on the concepts that we are studying now. Then you will get other chance. AK. There are three chances to clear those exams. After you guys are completed with your whole curriculum, you will be having your subjective and objective exams. TK, our program includes all those courses that is required. So you don't need to think about any other course. Meanwhile, when we will be having our discussion, you will like get to learn a lot of things and you will find your area of interest. Based on that, you can do your specialization of that course. There would be 6 exams. AK, actually, it is not possible for us to use Hindi. Actually, I wish that as well, but to be very honest, we have our international clientele as well, right? So NISM 8 is about derivatives, NISM 15 is about research analyst. You can opt for those exams, but I would suggest let the curriculum move a bit forward. Then you will realize that you have a good knowledge of all these things. And then when you will prepare for these exams, it would be a cakewalk for you. So yeah, the live class that was covered yesterday, the live class that was covered yesterday will be uploaded. So regarding one thing, guys, one thing I will make clear. Also, my previous batches knows this. Those batches that have been started recently might know this as well. That my responsibilities are not related to placements. There is a different pre-placement team associated to it, and I have never been the part of the placement process. So if you ask me regarding placements about like what is the package, so few students ask me usually that what is the package that I can expect, what are the where I will get placed, when I will get placed. So all those things you will have to raise a ticket about it. In a professional institute, there is always a department associated to do the particular job. My KRA is associated with your training and content development. So I am responsible for your training. If you have any doubts related to anything related to the syllabus that we are going to cover, you can reach up to me for placements. You will always have to raise a ticket about it. Never ever in the class try when we are in the middle of something, guys. Please try to understand how professional is this. Never ever in the class while discussing the topic, please don't divert to things that are not related to the topic. It would create a chaos in the class. It would not only waste my time and your time, but the time of rest of the people as well, your peers as well. NISM is not compulsory. It is just a suggestion that if you wish to have a good knowledge about the finance and recognize yourself with SEBI, you can go for NISM exam, but make sure that your syllabus is covered first. Then preparing for those NISM exam would be a cakewalk for you. So, so TB about it. Where can we get whole syllabus? The whole syllabus. You might have the counselor might have shared the brochure with you. In there, it is the whole syllabus is uploaded. So yeah, all these things that admin, those the person who has connected from the admin profile, please make sure you share on the ticket and the ticket will be forwarded to the respective management team. You will get a good exposure while doing those virtual internships. Yes, KM, raise a ticket about it. And please don't discuss these things regarding sheets and all those things that has been covered in the past classes in the live class. It would waste time for everyone. Yes, if you want to have a 101 session, you will have to raise a ticket. Once you are done with the syllabus, you will be having your exams. Yes, AB. So after completing with the curriculum, you will be having virtual internships and then exams and then mock placement sessions and everything. So guys, be right back. I don't know. I don't think so, to be very honest. Starting a career in finance, in investment banking, in a core investment banking job profile, it may be related to investment banking operations. Still, starting a career with investment banking without financial modeling is something which is very much difficult and it is not practically possible, to be very honest. Sure, VM. Yes, you will get, guys, you will get the PDF files for this topic. Don't worry, you will get the PDF file. Yes, KS, you can do that. Shall we start? Then there was build hyperinflation was something that we were going to discuss, right? No, you will be provided with the PDF KG and that would be sufficient enough for the exams. Don't worry about the exams. Try to focus on understanding the concepts. Never be worried about the exams. Exams are just part and parcel of life. It doesn't matter what you score in exams. What matters is what knowledge you have gained, and eventually, if you have gained right sort of knowledge, if you have understand everything practically, exams would be just a cakewalk for you. Don't worry about it. Yes, hyperinflation is the other type of inflation. But why there is all of a sudden increase in the cost of few factors without, okay. Hyperinflation occurs when prices of all goods and services rise uncontrolled over a period of time. So hyperinflation is also called as accelerating inflation. Hyperinflation is also called as accelerating inflation. Now, what is accelerating inflation? All of a sudden, rise in prices of a product or CPI, rise in prices of consumer price index in an uncontrollable manner and unimaginable manner, like two more than 200% rise in a given year. More than 200% rise in a given year is considered to be consumer, more than 200% rise in a consumer price index is considered to be hyperinflation. Now, what could be the reasons of hyperinflation, and which country recently has, yes, war may be the reason of hyperinflation, and natural disaster. Yeah, Sri Lanka witnessed economic turmoil. Pakistan has not yet witnessed the hyperinflation, but it is expected that the political turmoil and Pakistan's economy will break down, and it is going to face the adverse consequences of hyperinflation. Yes, emergency situation. Japan has negative interest rate. Japan, not neither United Kingdom has ever witnessed hyperinflation. Zimbabwe has witnessed hyperinflation, and the extent of hyperinflation in Zimbabwe was so much that that the prices of of products used to double. Prices of products used to double every 24.7 hours. Yes, Venezuela has witnessed hyperinflation. Greater than 200% is considered to be hyperinflation. For a given year, greater than 200% is considered to be a hyperinflation. Mausha is saying about Lebanon. I am not sure about Lebanon. Maybe Lebanon might have also witnessed hyperinflation. The causes of hyperinflation are emergency situation, war, natural disasters. If you wish you are confident, if you feel that you are confident with the topic, you can go for the quiz. So due to rise in income inequality at a point at there was a point when economy of Zimbabwe broke down. Economy of Zimbabwe broke down. And what was the reason? Rising poverty, rising income inequality, the people were not getting foods. If the increase in the consumer price levels would have been greater than 200%, then Somalia could have also been been an example of hyperinflation. But Yeah, COVID was an emergency situation. Pandemics have been an emergency situation. But in pandemics, due to pandemic, the prices of the product, or not, it's not about the single product, guys. Please try to understand. Yes, we will see that to beat inflation, if country keeps on printing more and more currency, what will happen? There are two indices actually, CPI Consumer Price Index, and then there is Producers Price Index. In the next topic, that is after completing this hyperinflation, we were jumping onto the Producers Price Index. There I was going to introduce you to what is the second indices. Yes, if now why Zimbabwe witnessed that? Yes, that was one of the reason. There is something called as monetary policy, which deals with demand and supply of money. Although I am diverting it, jumping on to something very further, but since most of you are curious that what was the reason behind the hyperinflation, it is essential for me to introduce some light into this. Monetary policy deals with demand and supply of money. And that process, Shashiji, is actually called dollarization. They actually didn't launch the new currency, but they adapted the dollar as their home currency. Demand and supply of COVID situation is not an COVID is not an example of hyperinflation, because in COVID we didn't see prices rising drastically, and it is not about rising price of one single product, but rise in price of the overall consumer price basket. So in India, at least, we didn't see that prices are becoming higher and higher overnight. So that is why pandemic and COVID was not an example of hyperinflation. Now, what was the reasons for hyperinflation? There is something called as monetary policy, which deals with demand and supply of money. When we will go to monetary policy, we will see that what happens when demand of money is increased, what happens when supply of money is increased, and what are the tools through which government and central bank play with demand and supply of money. What are the tools through which government and central bank control the demand and supply of money? And there, there you will find something called as printing money, printing currency, and printing currency will lead to currency depreciation. No, taxes is not the example of monetary policies. Taxes and government spendings are example of fiscal policy. But printing currency will lead to currency depreciation. So if there is high inflation, people are not able to have food, what government can do is government can print money and distribute it. But if government can print money and distribute it, everyone will be having more and more money, and the prices will be increasing rapidly. So these were some of the reasons of higher hyperinflation in Zimbabwe, although we will dig deep into it when we will be covering monetary policies. Okay. We saw that the causes of inflation, we saw that the causes of inflation, well, demonetization is not always done in order to fight with inflation. The purpose of demonetization is somewhat different, and whether the demonetization is successful and not successful, it has differed from countries to countries. Well, when it comes to India, the last demonetization that was done was in order to fight black money and money laundering cases. There was a clue that was given to the government that some of the countries are planning terrorist activities in India and have huge uh, fake currencies in rupee denomination. So it was essential for the government to do demonetization. Otherwise, India would have prone to a very higher terrorist attack. That is what Ministry of Finance gave as the reason for demonetization. On how to overcome the inflation, how to overcome the impact of hyperinflation, that we are going to see in monetary and fiscal policies, because again, I said that policies, government policies are used. I don't know whether demonetization will come again or not. And not only me, but none of the people can commit whether it will come again or not, because this is not something that can be interpreted by a common citizen like you and me. It is a very confidential data. The top five people of the country, the top five people and most crucial people of the country will be the one deciding that when, if there is a need or not to do demonetization again. And if you ask me my personal point of view whether demonetization would happen again or not, I think it won't happen again in the near term. At least in the next 5 years, I don't think it would happen again. Simply the reason being, the last demonetization had happened, RBI itself said that it has taken back around 97% of the currency that they printed. So the demonetization was a flop show for the sitting government. That is why I don't think they would risk it and do demonetization again. Yes, 2000 rupees were stopped printing. The reason said by the government was 2000 rupees was printed in order to give the supply of money in an efficient way and in a quick manner. It is easy to print higher denomination amount, and when the higher denomination of amount is printed in a less time, the supply of money in the economy increases. I will write the definition of hyperinflation, don't worry. Okay, and I want to save money as cash. If I know it in prior, that's why I asked. So no one can commit NV, to be very honest, whether demonetization would happen or whether it would never happen again, because this is a very confidential data. The last time ever it happened, only 3 people were knowing that it is going to happen. Okay. I will write about hyperinflation. Just give me a second. Hyperinflation refers to accelerating inflation hyperinflation refers to accelerating inflation, often exceeding 50% per month or more than 200% to 300%, more than 200% to 300% per year. So that is what I'm saying, Shikhar, that we, in order to discuss that what was the reason for hyperinflation in Zimbabwe, we will have to go to a topic called as monetary and fiscal policy. When we will go to monetary policy, we will see that monetary policies are those policies that government makes to affect the demand and supply of money. And to affect the demand and supply of money, there are various tools that government use. So if I start with the explanation that why Zimbabwe actually witnessed accelerating inflation, is inflation in a rapid sense. So coming to Shikhar, your doubt that what was the reason for hyperinflation in Zimbabwe, we will have to have a good knowledge about the tools that are used in monetary policies by the government, which impacts demand and supply of money. And if I keep on explaining that, it is altogether a different session. But in the coming session, in the next or probably next to next session, we will be having a whole together discussion on it. Would at least take 2 hours for me to explain all those monetary and fiscal policies. So when we will jump on to the discussion of monetary and fiscal policies, then I will come to the explanation of hyperinflation in case of Zimbabwe and what were the causes of it, and how could the hyperinflation how could a country be rescued from hyperinflation? What did Zimbabwe do to fight hyperinflation? So DK is saying because of excessive currency printing in Zimbabwe, Zimbabwe faced hyperinflation. It is one of the reasons. It is he's not wrong in doing saying so. As I said, the impact is due to demand and supply of money, and there are various factors through which various tools through which the demand and supply of money can be impacted. So it is essential for us to hold on our thoughts for a while, and when we will discuss monetary and fiscal policy, we will come back to the topic of hyperinflation and the case study of Zimbabwe. So now, what are the effects of inflation? If inflation happen, how will it affect the life of a common people like you and me? First one is reduction in purchasing power. So if there is an inflation, earlier you were to buy, you you can get 10 dairy milks for 100 rupees. But if the prices of dairy milk has been doubled, you will get 5 dairy milk for 100 rupees. And although it is easy to say so, but that would be very wrong. So NV is saying instead of printing the currency, in case again we are jumping to Zimbabwe, NV please note down this, and please we will discuss this while discussing monetary and foreign policy, monetary and fiscal policy. But NV is saying that instead of printing the currency, and not only NV, everyone note down this. The suggestion given by NV to the government is instead of printing currency, government should have announced the final price of the, for example, this product should be priced at this rate that it doesn't affect the economy. Well, that is wrong because that would be like a dictatorship. That would be like a dictatorship to the common public, and it would be not fair to all. This won't be fair to everyone. So that is not the right way to approach it. Although what government could have done is something that we will see after completing monetary and fiscal policy. Reduction in purchasing power is one of the effect of inflation. Uncertainty. No, actually, the slow growth of economy is not related to inflation. Inflation helps the economy to grow. But actually, the war of economics is between the growth in economy and inflation. If you want your economy to prosper, if you want your economy to grow, if you want India to be a 5 trillion economy, you will have to face inflation. You will have to face the rising prices. But making a balance between rising prices and making a balance between inflation is what every government fails to do or tries to do. We will see this in the next class. Probably it won't be possible to start today, I think, but when we will see this in the very next class where we will be discussing aggregate demand, aggregate supply, how demand and supply changes, and how demand and supply curve coming together affects the price level. So hold on your thoughts for a while. Hold on your thoughts for a while. Let us start our discussion on effects of inflation. We will discuss each and everything, each and everything. Trust me, guys. After the session of economics, there is whether it may be a Fed meeting, whether it may be a RBI meeting, whether it may be a press conference by the RBI governor, each and everything you will be able to understand in most detail. You will be able to write a report out of it, and that is what the level of understanding you will get. Just hold on your thoughts for a while. Everything will be crystal clear to you. Trust me. A reduction in purchasing power is one of the effects of inflation. Uncertainty. and planning changes is the other effect. Third is the income redistribution. So yeah, if purchasing power will reduce, the standard of living of people will also reduce. So what is the effect of inflation? First of all, you will be able to buy less goods at the same cost. Let's suppose you plan to buy a car worth rupees 5 lakhs. And due to inflation, the price of the car increased to 8 lakhs. So this rise in inflation, this rise in prices of the inflation hinders your plan, or challenges your plan. That is why you will have to change your plan. Either you will have to push the plan forward, or else you will have to go for a relatively cheaper car or a cheaper option of vehicle. Yes, salaries would increase, but it does not increase for everyone, right? Salaries, inflation might increase at 20%, and the salary hike that you might get in your company is 10%. In that case, you won't be able to afford that car at the end of the day, right? So yes, erosion of real income, that is a very valid point. As the effect of inflation. Erosion. So at this is actually the output of reduction in purchasing power, that is erosion of real income. So if purchasing power has fallen down, you will have to spend more from your space, from your savings, and the amount that you have saved, you will have to spend it, and that is why your income would reduce. So erosion of real income and erosion of your assets, or the value of your assets, erosion in the value of your assets, can one of be the reason of inflation. Well, I won't write this point because uh, uh, there could be erosion of income, but since inflation is in context, inflation is going on in the economy, the assets that you hold, the assets that you actually hold will also rise in value, and due to which your financial wealth can also increase. So although erosion of real income can happen, it is not necessarily that it should happen. Yes, higher interest rate is a measure to control inflation and not the way of controlling inflation. So not the impact, not the effect of controlling inflation. The third point is income redistribution. So when there is inflation in the economy, every profession is charging more prices. So those who have piled up their money will have to spend more, and it would be distributed to the people with less income who have started charging more for the product and services that they provide. So the income is distributed in the economy, and redistribution of income is one of the impacts and effects of inflation. Moving on, everyone clear with this? Everyone? PJ, which point do you have doubt in? So, how income redistribution is an effect of inflation? Let's suppose you are a real estate developer, and you have a lot of money. You have a lot of money. There was no inflation in the economy. Consider a scenario A with no inflation. you were you were selling houses at a higher profit margin and making good money out of it. Correct? But in case of no inflation, your profit margins and good margins were sustainable, and you were able to generate good profit percentage out of it. But when inflation occurred, the wealth the wealth that you generated was distributed to your suppliers of raw material. It was distributed to your workers due to inflation, because due to built-in inflation they would charge higher demand. When inflation will be there in picture, and let's say government are charging more taxes in that case, so your income will be distributed to government, taxes for the government will use taxes for development of infrastructure for common public. So due to this, income is redistributed due to inflation. Guys, got this? PJ, did you got this? SS, CK, even KK. Have you guys got this? Perfect. Now, there is something called as anticipated versus unanticipated inflation. Something called as anticipated versus unanticipated inflation. Anticipated is something that is predicted or expected. On the other hand, unanticipated is unpredicted or unexpected, which inflation is dangerous. Whether anticipated inflation is dangerous or whether unanticipated inflation is dangerous. What will create challenges to your planning? What will create challenges to your planning? The answer is unanticipated inflation. Simply because, let's take the car example again. Let's suppose 5 lakh is the current price of the car. 5 lakh is the current market price of the car. You are planning to buy that car after 3 years. And based on anticipated inflation, you expected, everyone knows that inflation is going to occur in the economy. Each one of us know that inflation is going to occur in the economy. So we will plan it accordingly. So according to our planning, according to our expectation, according to our prediction, we expected the price of the car will go to 7 lakhs. And based on that, you started making savings. So at the end of 3 years, you are able to accumulate 7 lakhs. So this rise in price was due to anticipated inflation. So your plannings are in line, correct? Your plannings are in line with your goals. But if you predicted the price rise from 5 lakh to 7 lakh, and the actual rise was 9 lakh, the extra 2 lakh of rise is due to unanticipated inflation, because you didn't predicted this inflation to happen. And due to this rise in 2 lakh rupees of unanticipated inflation, your plannings are not in line this time with your goals. That is why unanticipated inflation is more dangerous than anticipated inflation. Now, now concluding inflation, concluding remarks on inflation. Inflation is a complex phenomena. What is inflation? It is a complex phenomena. What are the causes of unanticipated inflation? Something like there was a war in Russia and Ukraine. No one expected that war to happen, but some of the circumstances turned out in a way due to which the war happened in Russia and Ukraine, due to which all prices rise throughout the world, and that caused some inflation. That is one of the example of unanticipated inflation. Kriti, got it? Kriti, shall I move forward? We will see what is stagflation, what is shrinkflation. All these things are yet to come. So inflation is a complex phenomena with various causes, effects, hoarding of resources would be an example of unanticipated inflation. Causes, effects. Inflation is a complex phenomena which has different causes, effects, and types. Government and central bank follow various policies to monitor and control. Yes, today's notes will be shared, don't worry. To monitor and control inflation. So based on this, we are done with inflation. In the next class, we will be starting with a new concept, that is aggregate demand, aggregate supply, and equilibrium. Aggregate demand, aggregate supply, and equilibrium. Where we will see demand curve, supply curve, and intersection between these curves. Or rather than saying intersection, we will see, actually it is intersection. The word is intersection. Intersection between demand and supply, that gives us intersection between the demand and supply curve, that gives us an equilibrium point. And also we will see that when demand and supply curve interact with each other, what are its consequences in the overall economy. So we still have 5 minutes, guys. What do you want me to do? Do you want me to start with this concept? Around economics, we will have 8 to 10 hours of session. It differs from country to country. There is no ideal inflation level which is defined by any of the economists. The emerging countries have higher rate of inflation, the developed countries have lower rate of inflation. Whether the inflation is higher than the historical levels or lower than the historical levels, depends and differs from country to country. So there is no ideal definition in level terms and percentage terms for the country. Even so, very good question, KS, that even though the value of rupee is dropping every year by 4%, why don't government still not trying to reduce that? So to increase the value of rupee, what government will have to do? They will have to use contractionary monetary policy in order to increase the value of rupee. And contractionary monetary policy have its adverse consequences. We will again see. So monetary and fiscal policy, trust me guys, is a chapter which will answer all your queries that has been rising till now. It will answer all your queries and you are going to love it. So just wait for a while. Please make sure that none of you misses or any of your doubts. Please make sure that none of you miss any of your doubts. Make a note of all the doubts that you're popping up in your mind now, because this is to be answered in a topic that is monetary and fiscal policy. And we are going to dig deep into each and every doubt. But what I feel is when you will be introduced to each and every concept, you will yourself tick that question. So you have marked the question 1, question 2, question 3, question 4. That has been popped up in your mind, which is really great. I love curious students. And when we will discuss that concept, you will yourself tick that this question is answered with through the logic that is followed in the class. This question is answered. This question is answered. This is what you will feel. So make sure you make a note of all of those questions. Never miss the question. So the last concept is aggregate demand, aggregate supply, and equilibrium. This is not a new concept. This is something that we are going to start in the next class. So don't worry about it. Don't worry about it, Priyanka. Thank you, Vimi. Yes, I am going to share the PDF. Give me a second, guys. Please stop messaging. Exchange rate instability can be categorized as what? So that is due to currency and forex changes. That is again the part of monetary policy and will be answered over there. It is also dependent on the gold reserve. Well, gold reserves are not the only thing. Earlier, there is something called as pegging. So earlier, gold was referred for pegging, then US dollars are referred for pegging. So it is not dependent on the gold reserve, it is dependent on the forex reserves, but also known as foreign exchange reserves. So value of the currency is not dependent on the gold reserves, but foreign exchange reserves. Give me a second, guys. Let me address your doubt. Can you talk about income redistribution in brief once more? So due to inflation, so pegging is again something that is we will be discussing in future. So don't worry about it. This was a doubt from one of the student, and this was the doubt from one of the student, and this was in context to something that he was asking. So don't worry about it. Pegging is something that we will be discussing in coming classes. What he was asking is, since you are so much curious, I will answer this. He was asking that whether the value of the currency depend on the gold reserve. I said no, the value of the currency does not depend on the gold reserve. It depends on the forex reserve. And pegging is something. So if you want to print 3 trillion currency, 3 trillion rupees, then you will need to have 3 trillion rupees of underlying asset. It may be gold or it may be US dollars. So earlier, if you wanted to print, let's say you are making a country, you are making your own country. So you can't just go on printing currency for your country. You can't just really do that. In order to print currency worth $1 million, you will need to have assets worth $1 million in your forex reserves, in your foreign exchange reserves. And what asset have you kept for printing that currency? So if you have kept gold as in reserve, you have pegged gold with your currency. If you have pegged uh, dollars with your reserves, you have pegged dollars with your currency. So this process of keeping forex reserves, and based on that printing the currency, is called pegging. No, Aslam, for one particular person, it is practically not possible to change class times. So thank you guys. Thanks a lot. Just give me a second. Don't leave the class yet. Around 9 months to 1 year case. Around 9 months to 1 year. Yes, yes. I am sharing the PDF. Let me just rename this. Yes, it will be uploaded on LMS also. Don't worry. So the PDF has been shared with you for today's class. PDF for the last class will also be shared. Just wait a second. Give me a moment. Yes, the PDF will be shared on LMS as well. If it is not shared by day after tomorrow or tomorrow, if it is not shared by tomorrow, EOD raise a ticket about it. Those who have joined from mobile might not have received the PDF. You will have to check LMS for it. I hope you enjoyed the session, guys. I hope you enjoyed the session. It was lovely interacting with you. I am open to reviews. Give your reviews, what you felt about today's session, and we will be right back next week. Thank you, guys. Thanks a lot. Those who have sheet for yesterday, actually, that is not practically possible. I wish to do that, to turn on the video, but it will it will take a space in my screen and I won't be able to write. I have a chat box that only I can see. Then there is Q&A box. And then if I open the video, it will block the space in my screen and I won't be able to write anything. So that is why it is not practically possible to turn on the video. Yes, I have shared. Hoarding is, let's say, Kriti, that you feel that you have 100 kilos of potato. You are a distributor of potatoes in your town and you have 100 kilos of potato. Let's say 1,000 or 10,000 kgs of potato. And if you are keeping it purposely so that when the prices of the potato will rise, then you will distribute it and you are manipulating the potato prices in the market. That is hoarding for you. So that is hoarding what you're doing. That is what I guess you were confused about. So this is the answer for hoarding. Aggregate demand, aggregate supply was, as I said in the last few minutes of the class, that was the last, uh, that will be covered in the next class. Yes, yes, you can say Sukriti. Onion was one of the example of, I think India did this right. So hoarding is technically not considered to be a fair practice. I am not sure whether India did it or not. I will have to read about it. Because okay, again, this is something which we will see Note it down, KG, note it down. And this is again, we will see in monetary and fiscal policies that why in the whole world, although we have so much of gold reserves, why we are not able to, although we don't have gold reserves as compared to the Gulf countries, but still why our rupees is depreciating day by day. We will see that in monetary and fiscal policy, KG. Thank you. It takes around 5.5 months to 5 months to complete the whole curriculum. So KM, you can check the brochure. It around 1 month of timing is remaining for your batch. By this month and your batch will be completed. KM. So perfectly fine. Thank you guys. Thanks a lot. Yes, both gold reserves are one of the types of forex reserves that is important for the currency. Thank you guys. Thanks a lot. Bye bye. Take care. Have fun. Have a great week ahead. Thank you. Thanks a lot. Bye bye.